Good morning, good afternoon, good evening. Welcome to Master Table Match 101. I'm here once again to give you a great video. Today we're gonna recap what's going on in the market today. As you can tell, today we have a meeting about the Fed, and as you all know, if for those that didn't follow or have any question, this is what the article say. So we're gonna read the article to clarify what's happening and what's going on for the future. And this is what it say. According to Yahoo Finance, Federal Reserve raised interest rate by 0.75 since 1994 to slow inflation. So basically, it's something that we're expecting for a long time. We're expecting for like Sunday it's 0.75 or 1. People were doubting it's gonna be 0.75 and 1, but it was confirmed that it's gonna be 0.75. It's gonna high. It's gonna 1994. The reason why, because the highest inflation 8.6 since total, I believe, since 1952, 54. 1954. So basically they have to increase in order to slow down the market, and that for the people to not go panic and then go sell everything. Let's go and more into the article. The Federal Reserve on Wednesday raised interest rate 0.75, the largest move has made since 1994. I was wrong, 1994. The central bank message that further interest rate hikes will come this year as the Fed leans on higher borrowing costs to demand on work to slow fast and expecting inflation. So basically, as I mentioned earlier, they want to slow down inflation. That's why they have to use hike. The higher they use the hikes is better for the inflation to slow down. But the thing is, the reason why they hike it because a lot of people are spending, too many people are spending money. Consumer prices too high. So basically, guys, don't spend that much, guys. Put your save money. If you don't save money, you're gonna lose it all. So that's why he said that you're gonna expect it to for the people to consume less. So basically that's why he has it. If everything go higher and the people spend less money, so the price gonna go down. But every time the price go up and the people spending more, so basically has to raise the hike again, and it's probably 0.75, probably 1 again. So we're gonna see. Overall, economic activity appears to have picked up after edging down in the first quarter. The policy studying Federal Open Market Committee said in a statement. So basically, you see, as you made, the Fed was fighting inflation, and now you see everything go high. So basically, they under to fight it. They're increasing prices. For example, the rent is higher than expected. The gas price is higher than expected. The food costs are higher than expected. And your chicken wings is higher than expected. So basically, you gotta pay attention to that. The Fed decision leaves short on borrowing costs to a larger rate between 1.5 and 1.75. As you can see, the federal fund target rate was right here, 3, and then right now when 2022, and then the expectation is supposed to be below 2%. So that's what it's been saying all along, in order to fight the inflation to be 2%. So we're gonna raise a hike. That's his message been all along, to be 2%. But at this point, it's not 2%, it's 8.6. So basically, we don't know how long it's gonna take for it to reduce 2%, and we don't know if it's gonna be possible. But it is what he says. So basically, we gotta go along with that, since he's the one in charge. An economic projection released Wednesday, the median Fed policymaker expected to further raise interest rate to roughly 3.4 by the end of the year. So 3.4 is when to add up every hikes, every meeting they do. So for meetings at 0.25, some meetings 0.15, 0.75. So adding up, everything up is 3% by the end of the year. That was suggesting that 1.745% and total rate hike. So for the past few days, I can see 0.5, 0.50, 0.75. That's actually 1 point something. So basically, when you add them up, is 0.75 so far. Speed across the main 4 scheduled policy meetings. So basically, he has to increase 1.75, still down for the rest of the meeting gonna be throughout the year. So you're gonna be aware as how much it's gonna increase and how high it's gonna get. So as the day goes along, as the meeting come along, and how the price are moving along as well. The Fed's now messaging is a much steeper path of rate hikes than it has previously forecast in March, when the median member projected a year and short rate closer to 1.9. So as you can tell, he has also a graph, and according to the graph that was showing up earlier. Hold on. Okay, this is a graph that you can see. We're right here. That's the 1.9 was talking about, and he wants you to keep it at below 2%, and then throughout the month goes by. No, we're not here no more. We're here, right here. So basically 3.5. So basically, you want to put it down to 2 again. So we're gonna see how it's gonna achieve that. As you can see, 2022, this right here. We're right here, and in 2023, and then we'll go here, and in 2024 want to be here. So basically it's below 2 again. So we're gonna know how it's gonna be able to, but that's the chart. As you can tell, as you can see as well, it probably be longer, probably shorter, and that's depend how it again around Ukraine and Russia, and also COVID, and also gas prices. We're gonna find out later on throughout the day or throughout the year. The urgency to move faster coincide with Fed policymaker expectation that inflation will not abate as fast as they had expected in the March projection. So basically, they have a projection and now expected price to rise by 5.2% as PCE over the course 2022 faster pace than 4.3 had forecast in March. So basically, he has it come up from March like, hey, this is what I expected 4.2, and then we're gonna go and then apply on what we have for 4.3 to keep inflation on down, and then for the economy to go boost crazy. And next thing you know, boom, the consumer came in and it's high. So next thing you know, he have to go back and then change that. Now he said no, we cannot do it, so we have to do something else, which is 5.2 now. So basically every time we consume more, he had to hike the price even higher. The central bank also downgraded expectation on all other key economy measure, expecting the US economy to grow by only 1.7 this year compared to the 2.8. So basically that's a big difference. That's a 1.1% downgrade. So basically that's mean that we are losing money instead of gaining money. So basically we're not really making profit. Actually 1% profit is below almost 0% instead of 3%, which is a lot. So basically we're gonna see again what's gonna happen, if it's gonna be 1% or it's gonna be being lower than 1%. Fed official also suggested they could see unemployment rise this year, with the median number forecasting 3.7 headline unemployment rate by the end of the year, which will be a notch up from the 3.6 record in May. So basically in May they have a record that's more people gonna be working, the job is available there, but not they find out that not a lot of people are working, and people are really interested in having the job and stuff like that. So basically that's a downfall, because if less people are working and a lot of things are going up, so basically it's a bad recipe for disaster. So we're gonna end up really in a bad situation. That's, you know, inflation gonna be very higher, and then we're gonna go to recession. And that's the part Powell trying to ignore. He doesn't want to say recessions and people gonna sell, and then we got the pull rug. So he doesn't want to say to panic people, but I think he feel bad for the people that's trying to make it day to day basis, to paycheck to paycheck, to their end needs. So basically that's what he's trying to do, which is I applaud him, because he doesn't have to do that, but again he make a good job about it. So basically we're gonna see how everything gonna go down the road for the day or the week or the month. We're gonna see. I'm not gonna read out to it because that's the repetition they do. And guys, if you know, if you're trading, be careful trade, because right now a lot of people are bullish because of the high risks today, and I think tomorrow is gonna be bullish because a lot of people believe it's gonna be a U-turn and retail gonna try buying, but Friday I believe it's gonna be red. So basically if you're bullish tomorrow, don't believe Friday is gonna be bullish as well, because today Friday is sell-off day. So basically it's gonna be red. That's my prediction. I'm not a advisor, so basically I'm just assuming, and then protect a portfolio if you want to, and whenever you make a trade, always gain 20% or 30% or 10% under that's daily growth, and through the month you're gonna have a big money coming in by next month or 2 months from now. And that was the video for today. If you like my video, give me a thumbs up, share to anyone that's new, subscribe, and smash that button. And once again, it was Master 101. I'll see you next video. Ciao, have a good day.